Let's begin with the 10th question. This is regarding insurance claims for loss of stock. Okay. So I'm sure you guys recollect insurance claims topic, where you have insurance claims for loss of stock separately and loss of profit separately. So in this problem is not given for loss of profit, but still we will quickly have a discussion once we are done with this problem. Okay. On 27th July 22, fire occurred in the godown of Messrs. Vijay Exports and most of the stocks were destroyed. However, goods costing 5,000 could be salvaged. From the salvaged accounting records, the following information is available relating to the period for 1st of April 22 to 27th of July 22. Stock as per balance sheet as on 1/4/22, 63,000. Purchases including purchase of machinery costing 10,000, 2,92,000. Wages including wages for installation of machinery 3,000, 53,000. Sales including goods sold on approval basis amounting to 40,000. No approval has been received in respect of 1/4 of the goods sold on approval, 4,12,300. Cost of goods distributed as free samples 2,000. While valuing the stock on 31st March 22, 1,000 has been written off in respect of certain slow moving items costing 4,000. A portion of these goods were sold in June 22 at a loss of 700 on original cost of 300. The remaining of these stocks is now estimated to be worth its original cost. Very important. Past records show that the normal profits rate is 20%. Company has taken the fire insurance policy for 55,000 with average clause. Compute amount of claim of stock destroyed by fire to be lodged to the insurance company. Also prepare memorandum trading account for the period 1/4/22 to 27/7/22 for normal and abnormal items. Now this is a very important problem where you have normal stock and also abnormal stock. He says there is while valuing stock on 31st March 22, 1,000 has been written off with respect to slow moving items cost 4,000 is what he says. That means there are few stocks which I have reduced. That means NRV is considered instead of costing. Okay. So now what he is saying, the remainder of these stocks after selling whatever is sold, okay, something is sold for a loss of 700, originally costing 3,000, and remaining is now estimated to be worth its original cost is what he says. That means original price is what you need to consider is what he says. Okay. So considering this, we are supposed to do how it is going to work out. Okay. Now he is asking us to prepare memorandum stock account. So with respect to opening balance, he says 63,000 is the amount of stock. What does this 63,000 mean? It contains two parts. One is 60,000 of normal stock and 3,000 of written down value stock, abnormal stock. But its original cost is 4,000. Okay. Then he says purchase are 2,92,000. Now why did he give you this information including the cost of machinery purchased? Why? Because he wants you to take only the cost of material which is used, material which is purchased, but not the machinery. Okay. Hence he has given you that part. Then wages also he says 53,000. Out of this 53,000, 3,000 is towards installation of machinery, so that's not supposed to be considered. And sales also 4,12,000 is the total sale. Out of this 40,000 is goods sent on return basis, of which 1/4 we have not got confirmation at all. Okay. So to this extent, stock would be with them only, with the buyer, whoever to whom I have sent the stock. Okay. So now cost of goods distributed as free samples is 2,000. This is very, very important. If this is supplied as free samples, it indicates that in my purchases to this extent value will reduce. Yes or no? Hello?
Yes, sir.
Okay, so you need to observe where all adjustments are supposed to be done and then prepare your memorandum trading account. Okay, now the fire actually occurred on 27th of July 2022. Why? Because that is the date which he is mentioning. Okay, and he has given you details up to that date. Okay, so using this information, let's go ahead and prepare memorandum trading account like how he has asked, and then close it off. Okay, so let's begin. I would do it here. So you have particulars, date would not be appropriate. Since you have two types of materials, you will have to take two columns and along with total 3 columns. Okay, normal stock, abnormal stock and total. Same way, particulars, normal stock, abnormal stock and total. Okay. Now let's begin. So first of all, opening stock. How much is the amount of opening stock given there? Hello? It is actually 63,000, but what he says is that 3,000 is after writing down by 1,000 rupees. Now what we will do is we will take it at original cost only and see what it is going to be. So 60,000 is your normal stock and 4,000 is your abnormal stock, all put together 64,000. Okay, so then to purchases. With respect to purchases, as I have just mentioned, out of 2,92,000 you should not take 10,000. Why? Because that is towards your cost of machinery, which is not supposed to be part of here. And then goods distributed as fee samples should not be part of your stock here. It is consumed by you. Okay, so effectively your purchases are going to be 2,92,000 minus 10 minus 2,000, which is 2,80,000. Okay, then what else do we take? We take wages. To wages. Now wages also, he told you something about wages there. What did he tell you? Total wages incurred are 53,000, out of which 3,000 is for installation of machinery. So only 50,000 can be considered. Alright, so this is with respect to wages. Next, sales you are supposed to take. This is very critical. Okay, now first of all, with respect to abnormal stock, I will tell you, please see. With respect to abnormal stock, what he is mentioned, please see here. I will wipe it off this part and redo once again. Okay, he says a portion of these goods were sold at a loss of 700 on original cost of 3,000. That means what price did he sell? He sold it for 2,700. 3,000 minus 700 is 2,700. That is his actual sale. Okay, so here you are supposed to take 2,700. Okay, now we will have to see normal stock, to what extent it is sold. Okay, let's see what it is. So total sales, what did he tell you? Total sales is 4,12,000. Okay. So out of 4,12,300, he says 40,000 is sent on return basis, on which 1/4 you have not got approval yet. Okay. So effectively your sales would be out of 40,000, if 10,000 you have not got approval but still with customer, in which case your sales effectively is only 4,02,300. Do you agree with me?
Yes, sir.
Okay. So let's take it by sales, it is 4,02,300, and then your stock is there with customers, no, right? By stock with customers, because this 10,000 I did not confirm sale, but it is still with my customer only, in which case I am supposed to show that. Now what value should I show here? Should I show that at cost or should I show it at sale price?
Cost, sir.
Only cost. Why? Because it is basically stock. You are not writing sales here. It's basically your stock, but it is in somebody else's place. Hence you are trying to state that to this extent of stock there is no damage. To calculate actually the damaged stock only, you know, you are doing all this job. Okay. So your stock with customer is MRP is 10,000. You know that 40,000 is sale price. Out of that 1/4 is with customer, which is 10,000. Now in the question he told you what is GP ratio. He says GP ratio is 20%. When nothing is mentioned, GP ratio 20% is on sales. So on 10,000 rupees, if 20% is calculated, it's going to be 2,000 rupees. So that means your cost has a, your stock has a cost of 8,000 rupees. Do you agree with me? Hello?
Yes, sir.
Okay. So this is with respect to stock. Next, apart from this, oh, here I have taken 2,700, it is 2,300. 700 is lost, no? It is 2,300. Sorry. Thanks for the message. Okay. Then, apart from this, what else do we have? Beyond this, there are no other transactions. Now you are supposed to calculate the profit or loss and then accordingly take the balancing figures, which would be your closing stock. Okay. Now, with respect to normal goods of 4,02,300, you made profit, yes or no?
Yes, sir.
Okay. So what is the amount of profit you have got? All right. So this 4,000.
80,460.
Yeah. Yeah. This 4,02,300 includes this 2,300 also. So effectively this is only 4 lakh rupees. Okay. So 4 lakh rupees is normal stock sold, and abnormal stock sold is 2,300. So all put together it is 4,02,300. Okay. So on 4 lakh rupees you generally make a profit of 20% is what he says. So to GP you can mention that 4 lakhs into 20% is 80,000 as profit. Okay. Whereas for abnormal stock you don't have a profit here. Why? Because you sold 3,000 worth of stock for 700 rupees of loss. So by loss 700 is supposed to be taken. Okay. And then remaining value whatever you get is basically your stock on date of file. Okay. So by stock on date of fire is going to be, so take total on the debit side 60,000 plus 2,80,000 plus 50 plus 80,000, all put together please. $470 on the debit side normal column, 4,70,000, and abnormal column is 4,000. Total is 2,80,000, 50,000, 80,000, all put together it is 474,000. Okay, and take it on the credit side, 4,70,000, 4,000 and 4,74,000. Now your balancing figure, what you get here?
62,000, sir.
Yes, is going to be 62,000.
Yes, sir.
62,000. Here it is balancing figure of 1,000.
1,000.
Both put together 63,000. Okay, so here it is 8,700. Now that you got what's your stock on date of file, is the problem over? Hello?
62,000, sir.
Not yet over.
Plus 1,000.
Yeah, we are supposed to check whether average clause is getting satisfied or not. Okay, so book value of the stock is basically 62,000 plus abnormal stock, it is 1,000. Okay, now so he says out of this stock, because of the fire there is a lot of damage, but he could salvage how much? However, he could salvage goods costing 5,000. Okay, that means to that extent I am supposed to reduce while calculating my insurance claim. Stock salvaged. Okay, so effectively the stock which is there is only 58,000 on date of file. Okay, so if 58,000 is what you have, now you need to compare this with your insurance amount. What is the insurance amount given?
55,000, sir.
55,000 is insurance amount given. Okay, insured value is 55,000 and gross claim is 58,000. Since gross claim is greater than insured value or insured value is less than gross claim, okay, there is average clause applicability. Okay, so average clause, if you see, what do you do in average clause? Come on, tell me. Hello?
Loss into policy value, loss into insured value divided by closing stock, sir.
Okay. So your gross claim 58,000 into insured value divided by stock on date of fire is what you take. So it's going to be gross claim is 58,000 into insured value is 55,000 divided by 63,000. Okay, so how much do you get now?
50,635, sir.
Okay, 50,635. So this is the amount of claim what you can make. Okay, so this is what we do in case you have loss of stock problem. Fairly speaking, this is a very holistic problem. Almost all adjustments are given here. Nothing is left out. Okay, only thing what is left out is maybe last year's profits, if it is given, last year's P&L is given or trading account is given, and he is asking you to prepare percentage of gross profit also for yourself. In such case, that's another model in which you can solve the problem. Okay, so Now, since we don't have loss of profit policy as a question here, let's understand loss of profit once. So with respect to loss of profit policy, what is the idea behind calculating loss of profits? The idea behind calculating loss of profits is the company generally or entity generally does not lose only stock, it also loses business. So when it loses business, it would like to claim from the insurance company for the amount of profits it has lost. So hence what we do is we work from bottom top approach. Okay, we try to provide for fixed expenses. Okay, and then we try to provide for the improvements for business, cost incurred for improvements for business. Like that we try to avoid the losses which are being incurred. So all of this put together is what we claim from the insurance company. In such case you call it as a loss of profit policy. So since there is no problem here, I'm not doing, but I'm sure you will be able to do it for yourself after all the classes what you have seen through. Okay, so let's move forward. 11th question, please see. Hire purchase transaction. This is Lina Transport Limited purchased from Ethnic Motors 4 tempos costing 2,75,000 each on hire purchase system on 1/1/2020. Payment was to be made 2 lakh down and the balance in 3 equal annual installments payable on 31st December 2020, 31st December 2021 and 31st December 2022 together with interest at 12% per annum. Lina Transport charged depreciation at the rate of 10% per annum on the diminishing balance. It paid installment due at the end of the first year, that is 31st December 2020, but could not pay the next on 31st December 2021. Ethnic Motors decided to take over 2 tempos and leave the other 2 tempos with the purchaser on 1/1/2022. Adjusting the value of the 2 tempos taken over against the amount due on 31st December 2021, the tempos taken over were valued on the basis of 15% depreciation WDV method annually. Show necessary accounts in the books of Lina Transport for the year ended 2020, 21, 22, assuming the balance was paid to Ethnic Motors on 31st December 2022. Now, what is this problem about? This is purely regarding your cancellation of lease. That is, we have sold it on hire purchase, but repossession is what we are talking about here. Okay, so now he is asking you accounts in the books of whom? Is it in the books of hire vendor or hirer?
Hirer, sir.
Hirer. So Lina Transport is basically the one who has taken it on lease, and he is asking accounts in the books of the Lina only. So basically he is asking you to prepare accounts in the books of Lina, which is hirer but not hire vendor, number 1. Okay, so first of all you need to show accounts for all the transactions is what he is asking. So let's do that. So initially what would happen, you would create an account called, this asset account would be created and a liability account would be created for the value. Yes or no? Hello?
Yes, sir.
Okay, so asset account and higher liability account would be created. Let's begin with that and then we will take it forward from there. Okay, so tempos account, okay, and then you have hire vendor account. Okay. In tempo account, initially what would you recognize? Initially, when you actually bought the assets on 1/1/2020 to hire vendor account, you would recognize the initial cost what is agreed upon, right? So 4 tempos costing 2,75,000 each. That means 2,75,000 into 4, which is 11 lakh rupees, is what your initial recognition is. Yes or no?
Yes, sir.
11 lakhs. And in hire vendor account also, by tempos, it is going to be 11 lakhs. Against this, how much down payment is done?
2 lakhs, sir.
2 lakhs is down payment done. Okay. So to the extent of down payment done, to bank 2 lakhs. Okay. Apart from that, he says first year he paid interest and principal promptly. That means his whatever installment due is there, he has made it in good. Okay. So at the end of first year, what is the amount of liability I have? Is it 11 lakhs or 9 lakhs?
9 lakhs, sir.
9 lakhs. On 9 lakhs only you are supposed to calculate the amount of interest, yes or no? So by interest, it's going to be 9 lakhs into the rate of interest, what he says is 12% per annum. Okay. So what is the value? Please tell me.
1,08,000.
1.08. Okay. 1.08 lakh. So all put together, he would make a payment of how much? He says payments made are equal amount of principal with interest is what he has paid. Now in how many payments is he making that? Did he tell you 3 equal installments how much it is?
3 lakhs, sir, per installment.
3 lakhs per installment. Where did he tell you about it?
Sir, in second line, sir.
Yes.
Third line, sir.
So he says the balance in 3 equal installments payable together with interest at 12% per annum is what he says. Now where do I get the value now?
Balance 9 lakh rupees divided by 3 years, sir.
Okay. So he is stating that 9 lakh rupees is supposed to be given in equal installments along with interest is what he has stated. That's all. Okay. He did not tell you to equate the entire payable on an annual basis. That's not what he has stated. So he has stated annually whatever balance is there on that 3 years it will be settled along with interest is what he has stated. So it's going to be on 31st of December to bank. Oh sorry, this is to bank on 31st December. I am going to pay 3 lakhs plus 1.8 thousand. Okay. So both put together is what I make payment. At the end of first year, I have a balance of to balance carried down. I have a balance of how much is it? 12 minus 4. It's going to be 6 lakhs. Okay. And by balance brought down 6 lakhs. Okay. Next. Now what has happened? This guy did not make payment, and hence the hire vendor would like to take back 2 tempos and adjust that against your asset account and liability account. That's what his intention is. So now we need to find out to what extent it is supposed to be done. Okay. So second year ending he could not do. That means for second year also I am supposed to charge interest, no, for full value, yes or no?
Yes, sir.
Okay.
Yes, sir.
So on entire 6 lakhs by interest into 12%, it's going to be 72,000. Okay, 0.72 lakh. So all put together, you have a liability of 6.72 lakh. Okay, now the payment is not done, against which I am supposed to give tempos. Okay, I am supposed to give tempos and balance would be there. Now this is what we are supposed to calculate here. At what value will I take 2 tempos? Now he says generally the hirer would be depreciating the asset at 10%. However, he says the hire vendor for repossession he is going to depreciate at 15%. Okay, so I need to calculate repossession value based on 15%. Okay, so now 2 tempos are supposed to be taken. Okay, cost is how much?
2,75,000.
Yeah, cost is 2,75,000 into 2, which comes to 5,50,000.
5,50,000.
Apart, so on this cost, I am supposed to deduct depreciation for 2 years. Depreciation for year 1 at 15%. How much is it? Please tell me.
82,500.
82,500. So balance at the end of WDV is how much?
4,67,500.
4,67,500. On this depreciation for second year at 15%, how much is it, please?
70,125.
70,125. Thank you. So the balance is
3,97,375.
3,97,375. So yeah. Okay. Now please note, actually in books the value could be different. I will recognize these assets only at 3,97,375 is what my hire vendor is saying. Okay. Now first what we will do is we will finish off tempo account up to this second year ending. Then we will see what is supposed to be done with that. Okay. So in the first year I have recognized the 2 hire vendor only 11 lakhs, and then by end of the year by depreciation I am supposed to take 10%, which is going to be 1,10,000. 1,10,000. Okay. So you are left with
9,90,000.
By balance it is 9,90,000. Okay, on 1/1/21 to balance 9.9 lakh. On this again by depreciation, how much is it?
99,000.
99,000.
Balance 8,91,000.
Okay. By balance
8,91,000.
91,000. Okay. Now this is the position. Now if it is 8,91,000 for 4 tempos, for 2 tempos how much is it? It is going to be 4,45,500.
500.
Okay. So something which is there in my books for 4,45,500, I am giving out for 3,97,375 against settlement. Okay. So what happens is I am selling it for a loss. I am giving it away for a loss, and I should recognize that loss in my books of accounts. Do you agree?
Yes, sir.
Okay. So this is what you are supposed to account for. So let's do it. Now balance please don't take right away. Okay. Instead we are supposed to take first with respect to the asset which is given out. Okay. By hire vendor you would show 3,97,375.
375.
By loss
48,125.
thank you, 48,125. Okay. And remaining is basically your balance. Okay. So it's going to be by balance carried down, it's going to be 4,45,500 for the remaining two vehicles what we have. Okay, so this is accounting for second year. Okay, now third year let's finish off, then we can go to hire vendor account separately. Okay, so on 1122 to balance brought down, it is 4,45,500. On this, depreciation is to be calculated. How much is the depreciation? 44,550. Okay, and you have a balancing figure whatever is there. Okay,
4,950.
4,950. Okay, 950. Okay, so by balance you have 4,950,000. Okay, now this is with respect to your tempo account. Now let's come back to our hire vendor account, where we have done till calculating interest and kept it handy. Now to tempos, the value what you are supposed to take is this 3,97,375. Okay, and the balance would be there with you now. Okay, what is the balancing figure? 6,72,000 minus 3,97,375.
2,74,625.
Thank you. 2,74,625, and then by balance brought down, it is 2,74,625, and interest would be on it at 12%. Please tell me what is interest?
32,955.
32,955 all put together would be paid. Okay, to bank, everything would be paid here. That's
3,07,580.
Oh, thank you. 3,07,580. With that, account gets closed. Okay, so this is what we do in case you have repossession of hire vendor stock. Okay, so this is the entire solution. Any doubts in this, please?
No, sir.
All right. Let's go ahead with department accounts. Bombay Cotton has two departments, Y and Z. The following information is provided for the year ended 31st March 2022. Opening stock, purchases, wages, sales, closing stock for both departments X and Y are given. Other expenses, salaries, rent, advertisement, general expenses, depreciation. All expenses are to be allocated between departments in the ratio of their gross profits. Very specific, that is. Department Y sells goods to Department Z at a profit of 25% on sales. Department Z sells goods to Department Y at a profit of 28% on cost. Okay, so very, very important. One is Y to Z, it is at 25% on sales, and Z to Y, it is at 28% on cost. Okay, so one guy is selling on sale, second on cost. That's very important. Okay, each department manager is entitled to 10% commission on net profit, subject to unrealized profit on departmental sales being eliminated. Stock transfers during the year from department Y to Z was 40,000 and from Z to Y was 50,000. Closing stock includes transfer from department Y to department Z 12,000, from department Z to Y 21,200. Opening stock does not include any inter-department transfers. Prepare department trading account, P&L account for the year ended 31st March 2022. This is a very, very interesting problem. First of all, how many types of department accounts do we have? Please recollect and tell me.
The departmental trading and profit and loss account.
How many kinds of department accounts do we prepare? We generally discuss in the initial first day of the session about department accounts. We would have discussed this. How many types of departmental accounts can be prepared?
3 types, sir.
What are they?
Interdependent, non-interdependent. In non-interdependent, centralized and non-centralized.
Excellent. Very proud of you.
Purchases.
Very good. Centralized and decentralized purchases. So, with respect to department accounts, you have broadly 2 varieties. Okay. One is dependent departments. Second is non-dependent or non-interdependent. Okay. In non-interdependent departments, you further have 2 categories, that is, one is with centralized purchases, second is decentralized purchases. Okay. Now, what are these? Dependent means one department is dependent on the another department. That means most of the cases it is a process. It is a process. Hence, they depend on other departments continuously. Non-dependent means I don't have a process. However, I have different departments inside my organization. In which case, in few companies, there would be centralized purchases for all departments. Second, there would be decentralized purchase for all departments. What does centralized purchase mean? In the classroom we keep discussing. For centralized, the best example could be taken as Reliance Digital, or you can take Tata Chroma, or any of these retail stores, that is with respect to electrical appliances and all. You can consider them as good examples. Why? Because, say for example, they would like to purchase TVs, washing machine, fridge, home appliances, kitchen appliances and all, and they just go to one particular dealer, say for example Samsung. So if they go to Samsung, they'll be able to find all these varieties in a single place. Fairly speaking, TV is basically a home appliance, fridge is basically a kitchen appliance, okay, washing machine, home appliance, then computers, none of these. This is typically for business or study purpose or office purpose. Like this, you name a variety, they have a product in it. So all of these are being available in a single place, so that what happens is I would purchase all of them at bulk from the manufacturer. In such case, we call it as centralized purchasing system. Now, what does decentralized mean? In decentralized, I cannot do that like that. I cannot do purchase of material like that by going only to one particular place. I cannot buy for all departments. In such case, you call it as decentralized purchases. Now, best example for this, which I always give you, is a good garment store. Garment store where you would have kids section separately, men's section separately. In men's, formals, casuals, and then you have ladies section. In that, pattu saree different, other sarees different, dresses different. Okay, there are multiple things which you showcase there in different ways. So for each of these, that particular department should go to a specific particular seller and buy that stock, or manufacturer and buy that stock. All of these materials cannot be sold by one particular seller in the market. In such case, you call them as decentralized purchases. Okay, right now the problem what we are seeing is about dependent departments, where one department is dependent on another department to produce its stock and sell it. Okay, in which case you call them as dependent departments. Now, let's understand what all have to be done in this. First of all, opening stock, he told you, saying that this opening stock does not contain goods from other department. With that, your 50% of problem is reduced actually. Okay, then he gave you purchases, wages, sales, closing stock, in wages, you need to check whether the 3,10,000 is part of the transfers or not. 3,10,000 is sales which is made, but he specifically separately told you that there are stock transfers also. Okay, in which case stock transfers are different and sales are different. Okay, so these two are separately supposed to be identified. Next, with respect to closing stock alone, he says from department Y some goods is with department Z, and from department Z some goods is with department Y, and he told you at what rate they keep transferring goods between them. Okay, so all of this information should be carefully taken, and then prepare your memorandum, your departmental trading P&L account. So let's begin with that. So since this problem, it's more of numbers and all, I'll do it in Excel for convenience. Okay. So you have two departments. So let's mention it about it. Departmental trading P&L account. Okay, take particulars, then department Y, department Z, and take total, or total you may take or not required. In fact, if he has not asked you, not required. Okay, so same with on the credit side as well. To start with, to opening stock. Opening stock he has given there as 60,000 and 40,000. Then to purchases. What did he tell you about purchases?
1,20,000, 3,05,400.
Yeah, thank you. 1,20,000, 3,05,400. Then to wages.
70,000 and 32,000.
Thank you. Then you have transfers made. Let's understand transfers. Okay, so these three would form part of your debit side, and these two would form part of your credit side, but still we have transfers. So let's see what transfers it is. Stock transfer from department Y to Z was 40,000, and from department Z to Y was 50,000. Okay, so in debit column, in debit side, in Y column, how much should I take? 50,000 or 40,000? It is 50,000. And in Z column, I am supposed to take 40,000 because that is what is received by Z. Okay, so let's do that. To transfer from other department, here it is 50,000, here it is 40,000. Okay, now with this on debit side we are done with all. Now on the credit side, by sales it is given there as
3,10,300.
Thank you. 3,72,700.
By transfer.
Oh, thank you, sir. நான் பண்றேன்டா. நான் டைப் பண்ணனும்ல, டைம் ஆகும்ல. By transfers it is going to be what now? So should I take same for 50,000, 40,000 or 40,000, 50,000? It is 40,000 and 50,000.
Yeah.
Okay, so with this we are done with transfers, and then by closing stock we are supposed to take. Closing stock is already given there, which is 23,700 and 40,700. Okay, Okay, so with this we are actually done with the regular department accounts. Okay, so we have not calculated what is the profit element inside transfers. Nothing we have done here. Why? Because we will do it in another place. Okay, we will do it separately when we do it for the entity. Okay, so now we can calculate what is the GP. To gross profit, it's going to be this minus sum of all of this. Okay, so you have got 74,000 and 64,000, then by GP okay. Now did he tell you that expenses are supposed to be taken based on GP ratio or not?
Yes, sir. Told, sir.
He has already told. So total, if you see, it is 1,20,000, and in the ratio of 74:46 is what you are supposed to take various expenses. So expenses, if you see, salaries 30,000, rent, advertisement, general expenses, depreciation. 4 items are given, 5 items. Okay, so let's take it to salaries. It is 30,000 divided by 120 into 74. Here it is going to be into 46. I'll explain. No problem. No problem. See, he has given you here saying that all expenses are to be allocated between departments in the ratio of their gross profit is what he has stated. Okay, so these expenses are what you are going to do like this. Now, did you get GP ratio? Your GP ratio is 74,000 and 46,000. Okay, so in this ratio only you are supposed to split all your expenses. Is that clear, Ramnarayan?
Yes, sir.
Next, to rent. Rent, it is 9,000. Okay.
3,450.
Thank you. Excel formula was போடுறா.
Sorry, sir.
Advertisement.
4,000, sir.
Advertisement, it is 24,000. So the split up is going to be 14,800 and 9,200. Then general expenses, it is 3,000, again in the same ratio. Okay, then depreciation, it is actually 18,000. Okay, in the ratio of 74:46. Okay, so you've got these numbers now. So with this, are we done, or should we do something else? He has stated something about, please see, he has stated something about manager's commission. Okay, now each department manager is entitled to 10% commission on net profit, subject to unrealized profit on departmental sales being eliminated. Now what is he trying to convey? You should first eliminate the departmental URPs. Okay, and then calculate the managerial remuneration is what he is asking you to do. Okay, so at this juncture, let's first understand what is net profit, and then we will eliminate the amount of URP. Okay, or you can directly eliminate the URP here itself, because you directly know what is the transfer methodology they have followed. Okay, and then you can do it, and then you would deduct the amount of managerial remuneration, finally arrive at the profit. Okay, so let's do it. Yeah, so to URP, let's calculate. Now first of all, whenever Y transfers to Z, he says profit is 25% on sales, right? So what is the amount of profit Y has made by transferring stock to Z? Hello?
25% on sales, sir.
10,000, sir.
10,000, very good. Any other answers? Any other answers? Hello? Now, do you recollect me telling in the classroom saying that you are supposed to calculate this URP only on stock which is left over? It's not actually on the transfers which are made. It's actually for the stocks which are there. You are not supposed to show your stock at inflated price. Within the same entity, you cannot show them at inflated price. For that purpose only, you are doing this entire exercise of calculating unrealized profit. Okay, so while you calculate that, Y sent to Z 12,000 worth of goods, and which is lying. Actually, they sent 40,000 worth of goods. He actually sent 40,000 worth of goods. Okay, however, on the balance sheet date, only 12,000 is left over there. On the 12,000 only, I am supposed to understand what is the amount of unrealized profit. Remaining amount, it is already sold by Z to somebody else. So that is really profit made by the company only. It is not internally being generated here. Okay, in such case, this is supposed to be recognized. Okay, so the amount of profit what you are supposed to take here is 12,000 is your sale price, and you say that your profit margin is 25% on sale price, which comes to 3,000 rupees. This is the profit made by Y on transfer of goods to Z, which is right now lying with Z. Am I making sense?
Yes, sir.
I'll repeat once again, no problem. Generally, you are supposed to calculate this URP and show it as an item of expense, because this is transferred within the departments, within the entity, between the departments, in which case this profit is not really earned by the company, because unless the goods go out of the company, you cannot tell that it is sale. Okay, so in this case, what has happened is he is transferring, one department is sending goods to another department at markup. So any markup which is lying in the inventory, that is closing stock, would not be appropriate. Why? Because my inventory closing stock is supposed to be shown at cost or NRV, whichever is less. But this fellow, he is showing at cost plus markup. That markup I should deduct. No. Where should I deduct? I am going to deduct in this P&L account now. Okay. How much am I going to deduct? Only on the stock which is there, with the other department which I have sent at markup, that markup alone I should deduct. Is that clear? Hello?
Yes, sir.
Okay.
Yes, sir.
So now Y sent to Z 40,000. However, out of that 40,000, only 12,000 worth of goods are there inside Z. Okay, remaining he has already sold somewhere, so I need not bother. That is really profit earned by the company only. Okay, so on this 12,000, 25% is what we calculate, which comes to 3,000 rupees. This is what you need to recognize here. Now let's do it. So in Y column you should take 3,000. Same way for Z also you should do. For Z, what is he saying? Z profit margin is 28% on cost. Okay, if it is on cost, right now Z goods with Y is 21,200. Okay, so here what would be the amount of URP you are supposed to do? 21,200 is the amount of stock what you have, into, if he says 28% is on cost, that means this 21,200 is equivalent to 128. This is market price, no? That's why.
46.
Yeah. So what you would do is into 28 divided by 128 you would do. How much would it come?
4638.
Thank you. 4638. Okay. So this is the value which we are supposed to create as markup in case of Z. Okay. All right. So with this we are done with URPs as well. Now let's move forward in calculating the managerial remuneration. Okay. Now managerial remuneration, what is he saying? He would get, how much would he get is what he is saying?
Sir,
He gets 10% before charging such remuneration. That's what he says, right? Each manager is entitled to 10% commission on net profit, subject to URP on departmental sales being eliminated. Okay, it's just about deducting this amount of stock reserve, and on balance you can calculate 10%. Okay, so managerial remuneration, if we calculate, it's going to be 74,000 minus sum of all the above, okay, into 10%. $1920, and here it is going to be 916. Clear?
Yes, sir.
And finally what you get is your net profit. Okay, so let's take totals. On the credit side it is 74,000 and 46,000. To net profit, it's going to be this minus sum of all the above. Okay, so finally your net profit is 17,280 and 8,245. Can we go ahead?
Yes, sir.
All right. So let's look through the next question. Branch accounts, especially foreign branch, interesting. MS & Co of Lucknow has a branch integral foreign operations, very specifically told, in Canberra, Australia. On 31st March 22, the following ledger balances have been extracted from the books of Lucknow office and the Canberra. So Lucknow office, it's in rupees. Canberra, Australian dollars it is given. Capital, reserves, land, building depreciation provision, plant and machinery depreciation, provisions, that is plant and depreciation provision, debtors, creditors, stock on 1/4/21, branch stock reserve, cash and bank balance, purchase and sales, goods sent to branch, managing partner salary, wages and salaries, rent, office expenses, commission receipts, branch and head office accounts. The following information is also available. Stock as at 31st March 22, Lucknow 1,50,000, Canberra 3,125 Australian dollars. All stocks are out of purchase made abroad. Head office always sent goods to branch at cost plus 25%. Provision is to be made for doubtful debts at 5%. Depreciation is to be provided on building at 10%, plant and machinery 20% on WDV. You are required to convert branch TB into Indian rupees using the following exchange rate. Opening is so much, closing is so much, average is so much, for fixed assets is so much. Prepare trading account, P&L account for the year ended 31st March 2022, showing the extent possible head office results, branch results separately. Okay, so this is a very holistic problem where you can call it as independent branch. Okay, independent branch, but still the operations are integrated to head office. Okay, so since the operations are integrated to head office, you are supposed to convert various numbers at various parameters. Okay, now recollect what we have discussed about this in AS11. When you convert foreign finances into Indian rupees, what rates are you supposed to take? First of all, for monetary items, what rate would you use?
Closing rate, sir.
Okay, monetary items closing rate. Non-monetary items
At the rate of transfer, sir.
at the rate of
Transfer.
transfer.
Transaction rate, sir.
Transaction. Okay, fine. At the rate on date of transaction. Next, with respect to income expenses,
Average rate, sir.
it is average rate. Generally, it is supposed to be rate on date of transaction, but it is practically difficult for us to give that rate on date of transaction for every item. Hence, we would show it at average rate. Now, depreciation, what rate would you take? Under integral method.
Closing rate, sir.
Closing. Whatever rate you apply for fixed asset, you are supposed to apply for your depreciation also. Okay. So,
Okay, sir.
yeah. So, this is with respect to integral method. So, first let's begin with converting the foreign trial balance into Indian rupees, and whatever difference comes is going to be taken into foreign your P&L account. Why? Because your entire expense and incomes, whatever integral operations are there, they are not avoidable by the entity. Hence, you would convert the foreign finances into Indian rupees only. Okay. So, now having said about this, let's begin with the solution. I will again do this in Excel for convenience. Conversion of foreign TB into Indian rupees. Okay. Particulars: debit amount, credit amount. Okay. Basis. So these are in Australian dollars. And then debit and credit amount in INR. Okay. Now to start with, look at each item which is given in the question. Capital, what rate would you close? So first of all, capital is not there in Canberra branch. So it starts with plant and machinery. So value is 200. Now what rate would you consider for this? Hello? Plant and machinery, you would consider rate on for fixed assets, yes or no?
Yes, sir.
Okay, so it is 46. So it's going to be 200 into 46. Then plant and machinery depreciation provision. Okay, so it is given as there as 130. So for this also you are supposed to apply the same rate. Okay, 46 is only supposed to be applied. Oh, it is 130 on the credit side, right? Okay, then debtors and creditors, let's take debtors and creditors. So values given there are 60, 30. Now what rate are you supposed to take? What kind of items are these? Are these monetary items, non-monetary items?
Monetary.
Monetary items. So for monetary items you would take closing rate which is 53.
Yes, sir.
Then stock is there, opening stock 20. Now what kind of item is this? Hello? Opening stock, you take opening rate, yes or no?
Sir.
Sir.
Opening stock is 20 given there. Opening rate is 50,000. Then you have branch stock reserve only in head office books, so you need not bother about it for now. Cash and bank balances 10 is there. What rate are we supposed to take? We are supposed to take closing rate. What is closing rate? 53, which is 530. Then purchase and sales. Purchase and sales 240, 520. What rate are you supposed to take? Hello? Oh, it is 21, 23. Okay. Yeah, what rate are we supposed to take? Purchase and sales. Average rate is supposed to be taken. Average is 51 rupees. Okay. Okay, so it is 1020 and 6,273. Next, goods sent to branch 5 is there. Now for this, what would you take? You take what is given in the head office books, because you need to reconcile them. Okay, so you would assume that it is properly accounted, hence you would take only 100. Oh, so it is 500. Okay, so next, Managing partner salary does not exist. Wages and salaries 45 is given. So what rate would you take for conversion?
Average rate, sir.
Average rate.
51 rupees.
Thank you. Next. Rent 12, office expenses 18, then commission receipts are there. All these three, in what rate would you take? These all are in average rate only. Okay. So
Yes, sir.
rent, office expenses and commission. So all expenses are 12, 18 and 100. Okay. Rate is so and so. Here it is going to be 100 into 51. Okay. Apart from this, you also have head office account in branch books for 7. So this you will not convert, you will take actually what it is. Okay. Oh, 120. It is 7 here and it is 120 here. Okay. So with this we are done with almost all everything. Now let's see whether our what would be our totals. So it is 390 and 390 in US in Australian dollars, and with respect to Indian rupees, on the credit side you have greater number, so the balancing figure is supposed to be taken on the debit side. Okay. So P&L for the amount of difference, $208. With that your balance sheet actually matches. Okay. So this is basically a balancing figure. So once this is done, you can go ahead with preparing your trading P&L account. Yes or no?
Yes, sir.
Okay. Now with respect to trading P&L account, what all did he tell you? Stock on 31st March 22, Lucknow it is 1,50,000, Canberra it is 3,125. All stocks are out of purchases made abroad only. That means there is nothing which is sent by Lucknow branch to Canberra. Okay. So this will save our time here because there is no concept of stock reserve to be shown in the balance sheet date. Then head office always sends goods to branch at cost plus 25%. So he has given you details about where the goods are sent and all. Okay. Next, provision is to be made for doubtful debts at 5%, and depreciation is to be provided on building at 10% and 20% on WDV for plant and machinery. So all these I'm sure you'd be able to do for yourself, but since we need to quickly run through the answer, I will use the material itself to run through the answer for you. Yeah. So till here we have done actually. So till here we have done. Now trading P&L account is what you are supposed to see. He has prepared it in 3 columns. One is for head office, branch and total all put together. Everything in Indian rupees only. So please see, opening stock is taken, purchases, goods received from head office only in branch it is shown. Okay, and then goods sent to branch only in head office it is shown, and then gross profit is arrived at, expenses are taken, depreciation is calculated, provision for bad debts is calculated. Then he has taken the amount of exchange loss for the company as a whole. Most important, it is not supposed to be taken in one particular department or branch. It is for the entire branch as a whole, hence it is taken as such. And branch stock reserve for 4 is created. Okay, so what does this generally mean? It is created for the purpose of stocks which is there with branch. Okay, then so apart from that, you only have balance of profits which are arrived at. So with that the problem is over. That's a very simple trading P&L account preparation, hence I am not concentrating much on preparing that now. Okay. What page is the question number in? Yeah, we have reached. Now, incomplete records, very interesting this is. Aman, a ready-made garment trader, keeps his books of accounts under single entry system on closing date, that is on 31st March 21. His statement of affairs stood as follows. Aman's capital 4,80,000, loan 1,50,000, creditors 3,10,000, total assets, building, furniture, motor cars, stock, debtors, cash in hand, cash at bank, total. Riots occurred and a fire broke on the evening of 31st March 22, destroying the books of accounts. On that day, the cashier had absconded with the available cash. You are furnished with the following information. So that means 2 things happened. Number 1, books of accounts got destroyed. Number 2, this accountant is a fraud fellow. Okay. So now, sales for the year ended 31st March 2022 were 20% higher than the previous year's sales, out of which 20% sales were for cash. He always sells his goods at cost plus 25%. There were no cash purchases. Very, very important. Collection from debtors amounted to 14 lakhs, out of which 3,50,000 was received in cash. Business expenses amounted to 2 lakhs, of which 50,000 were outstanding on 31st March 22 and 60,000 paid by check. Okay. So gross profit as per last year's audited accounts was 3 lakhs. Provide depreciation on building and furniture at 5% each and motor car 20%. His private records and bank passbook disclose the following transactions for the year. Payments to creditors by check 13,75,000. That means what? He is paying out of his own personal pocket. That's what important. Okay. Personal drawings by check 75,000. Repairs by cash 10,000. Traveling expenses, cash deposited in bank, cash withdrawn from bank. These are the various transactions which are there. Stock level was maintained at 3 lakhs all throughout the year. The amount defalcated by cashier is to be written off to P&L account. You are required to prepare trading P&L account for the year ended 31st March 2022 and balance sheet on the date of Aman. All working should form part of your answer. Okay. So this is the very good question what you have here. Now, first of all, for each and every item, you should first come up with a working note. Only then this problem is possible. Okay. So let's do it independently. Now, first of all, he has given you balance sheet as on last year, 31st March 2021. He has given you balance sheet. Okay. And he told you what is the profit margin also. Why do you think he had told you this profit margin? To calculate, generally what would be the, he has told you what would be the percentage of markup and all, he gave you gross profit. So using that you will be able to find out what would be the sales and all. That's why. Okay, so let's begin with the solution. He is asking you P&L, balance sheet, and apart from that workings. So let us start with workings and then we will go to balance sheet, P&L. Okay. Now let's start with cash account. Let's open and keep it. Particulars amount, again particulars amount. Okay, so same way open debtors account also. Why? Because he has told you something about debtors, creditors and all. Open creditors account also. Okay, so with this let's begin with the solution. Okay, so let's start taking balances to balance brought down. $20,000 and $85,000. Okay, so bank account we are supposed to show separately. Let's do it here. So in bank account to balance brought down, it is 85,000. Okay, then in debtors account 1,70,000. Creditors account 3,10,000. Okay, so these are the various accounts we have opened and kept handy for now. If required, any other accounts also will open. Okay, so now let's go through what all he has stated there, so that we'll have a understanding of what he is saying. Okay, now collections from debtors amounted to 14 lakhs, out of which 3,50,000 was received in cash. Okay, so that means he has received 10,50,000 in checks. Yes or no? Hello?
Yes.
So let's do it. So in cash account to debtors, it is 3,50,000. Okay, and in debtors by cash account 3,50,000. Okay, and by bank account he has received 10,50,000. Okay, then what else has happened? What else did he tell you about the sales and all? He says sales for the year ended 31st March 22 were 20% higher than the previous year sales, out of which 20% sales were for cash. He always sells his goods at cost plus 25%. There were no cash purchase at all. Okay, now this information merged with fourth point, you can find out what is current year sales. Okay, so he says this year sales is 20% higher than previous year sales. he told you GP for last year is 3 lakhs, and he says he always sells his goods at cost plus 25%. That means if it is cost plus 25%, it is 125% of 125% is the sale price. Okay, so on sales price it is going to be considered as 1/5 of sale price. Do you agree with me?
Yes, sir.
Okay, so using that information, if this 3 lakhs is 1/5, what is the turnover? If we calculate, we can come back and identify what is the sales in the current year. Okay, so let's do that. Leave this information here for now. Come down, working note.
அந்த provision மறுபடியும் சொல்லுங்க.
நான் சொல்றேன். As I do, I'll explain once again. Working note 1, calculation of sales for the current year. Okay. Sales for previous year is a question. Okay, so okay, all right, let me take it this way. GP for previous year, it is given, it is 3 lakh rupees. Okay, profit in previous year as a percentage of cost of, as a percentage of cost, it is told that 25%. Okay, now what am I going to do? This is on cost. Profit in previous year as a percentage of sale, it is going to be 20%. Okay, so now your GP you got 3 lakhs, which is equal to 20%. So sales in previous year shall be 3 lakhs divided by 20%, 15 lakhs. Do you agree?
Yes, sir.
This year, what did he tell you? This year sales has increased by 20%. Okay, increase in sales in current year, %. That means sales in current year is going to be this into 120%, which is 18 lakhs. If sales is 18 lakhs, what is he telling you? Out of sales, only 20% is cash sales. Okay, so less cash sales, it is this into 20%. Credit sales is this minus this. Am I making sense? Okay, now this credit sale, where am I going to use? In my debtors account. Okay, to sales, it is going to be 14,40,000. Now that I have got 14,40,000 here, I can close my debtors account. No, hello, I can close and tell what is my closing balance. So he told you,
Yes, sir.
so by balance carried down, it is 2,10,000. This is what I am going to use for my balance sheet purpose. Okay, so one part is over. Now he has told you cash sales is 3,60,000. To this extent, I should record in my cash book also, no? Hello?
Yes, sir.
To sales, 3,60,000. Okay. So all transactions with respect to this are carefully recorded. Now, please look at what he is saying. Business expenses amounted to 2 lakhs, of which 50,000 were outstanding on March 22. Fine. 60,000 paid by checks. Okay. Business expenses are paid by checks for 60,000 is what he is saying. So let's record for that. By business expense, it is 60,000. Okay. Then now look at what all other transactions he has stated here. Okay. Payment to creditors by checks, 13,75,000. Okay. So that means to bank 13,75,000 you are supposed to take here, and in bank account also by creditors you are supposed to take 13,75,000. All right. Then what are the transactions did he tell you? Personal drawings paid by checks, 75,000. Okay. So by drawings, 75,000 in bank account. Then repairs paid by cash, 10,000. By repairs, 10,000. Traveling expenses paid by cash, 15,000. Okay. Then cash deposited in bank, 7,15,000. In bank account to cash, it is 7,15,000. Then cash withdrawn from bank, 1,20,000. By cash, 1,20,000. To bank, 1,20,000. Okay. So apart from this, is there any other item which he has stated? Hello?
No, sir.
All right. Let's see.
So, sir, you missed business expense in cash, sir.
Business expense. Okay, fine. Yeah. Business expense amounted to 2 lakhs, of which 50,000 is outstanding and 60,000 is paid by check. That means 2 lakhs minus 50,000 minus 60,000. Remaining amount is paid by cash only, no? Okay.
Yes, sir.
So
90,000.
yeah, business expense 90,000. Okay. So with this, all transactions are done. Now whatever balance I have, it is assumed that it is taken over by that fraud accountant. Okay. So total your debit side 8,50,000, and what you get here is going to be 20,000 is what this fellow has absconded with. Okay. So by cash lost, okay. So this is cash lost. Now let's look at bank balances. I had 85,000 initially, and then oh, there is some collection by check which is received from debtors I am supposed to take. which is 10,50,000. Okay, so all of this put together would give me 18,50,000, and on the credit side it's going to be 2,20,000. Okay, so 2,20,000 is the balance what I have in bank account. Can we go ahead?
Yes, sir.
All right, next. So now we are done with bank account, cash account, debtors, creditors we are yet to do. Okay, let's finish off creditors now. Now from creditors, you got to know you made payment of 13,75,000. Okay, and do you know what are the amount of purchases? Did he give you any other hint? Hello? Did he give you any hint for purchases calculation?
Yes, sir. Stock level maintained, sir.
Stock level was maintained at 3 lakhs all throughout the year is what he has stated. Okay, so if 3 lakhs is maintained, you have you had a sale of how much in the current year? You identified that the sales made in the current year is 18 lakhs. So if 18 lakhs is sold, you need to see to what extent you have purchased, yes or no?
Yes, sir.
Okay, so using that information you can calculate what is the amount of purchases made. So let us calculate it by preparing trading P&L account, only then you will be able to get it. Okay, so let's prepare trading P&L account now. To arrive at the amount of purchases. Okay, so to start with, to opening stock, it is given there as
2 lakhs.
Thank you. 2 lakhs. To purchases, I don't know for now. This could be the balancing figure. And then to expenses, if you see, any direct expenses incurred?
No, sir.
Nothing. So fine. On the credit side, by sales, it's going to be
18 lakhs.
18 lakhs. By closing stock,
3 lakh.
3 lakhs is given. Okay, so now you know what your GP is also. To GP, it is already calculated, which is 36. Okay, it is 20% on sales, no. So
Yes,
it is
sir.
going to be 18 lakhs into 20%, which gives you 3,60,000. So when you total credit side, and this would be your balancing figure.
Fifteen lakh 40,000, sir.
Yeah. So it's basically 15,40,000 balancing figure. Okay. So this is what we arrived at. Now that we got this, we can go back to our creditors account and take that by purchases 15,40,000, and we get a balancing figure now. Okay, to balance carried down is going to be this minus this. Is that clear?
Yes, sir.
Now
Yes, sir.
we are almost done with the problem because we have finished off trading account. We have identified what are creditors, what are debtors, what is cash and bank balance, everything is done. Okay. Now we can go ahead with preparing the P&L account, continue and prepare the P&L account so that we can finish off your entire transactions here. Okay. So by GP it's going to be 3,60,000, and now can you please tell me what all expenses are incurred? So first of all, business expense 2 lakhs is there. Okay, then to repairs, he has mentioned about repairs, which is 10,000, and then to depreciation you are supposed to take, he says depreciation is to be taken at 5% on building and furniture, and motor cars 20%. So building and furniture it's going to be 3,25,000 into 5% and 50,000 into 5%. Motor car 90,000 into 20%. Okay. So depreciation, there are 3 items to be taken. 3,25,000 into 5%, then 50,000 into 5%, then you have 90,000 into 20%. So all of these 3 put together is basically your depreciation. Okay, then what other items do we take?
Traveling expense.
Yeah, so he says here in this 6th point, he says travel expenses are 15,000. You can take that. Travel is 15,000, and then you have any other items to be taken? Yeah, you have that loss in cash account, right? To loss in cash account 20,000. 20,000 is the amount of loss. Okay. So with this you are done with all transactions. So to net profit, it's going to be this minus sum of all of this. Okay, so your net profit is 78,250. All right.
Yes, sir.
Now we can go ahead with balance sheet as well. Liabilities and assets. So to start with liabilities, you have a capital which is given there. Capital is given there as 4,80,000. To this you are supposed to make adjustments with respect to drawings and all what he has given. Personal drawings by check 75,000. Okay, so that is supposed to be taken, less drawings. Then add profit for the period 78,250. Is there anything else to be done? That's it?
No, sir.
That's it for capital, this is the only item to be taken, only 3 items. So capital is basically 4,83,250. Then you are given details of loan 1,50,000 and you have not seen any cash or bank transactions with respect to loan. So assume that the loan is like that only for 1,50,000. Okay, creditors would be your you calculated already creditors what they are. So you have a balance of 4,75,000. Please take that. Okay. And apart from this, you also have outstanding expenses. Outstanding expenses to the extent of 60.
50,000.
Yeah, he has told you here with respect to business expenses. He says 50,000 is outstanding. Okay, so 50,000 you take. So I think that's it on the liability side. Coming to asset side, you have buildings, which is 3,25,000 minus depreciation of 16,250. Furniture 50,000 minus 2,500. Motor car 90,000 minus 18,000. Then you have stock, which is already known, 3 lakhs. Then you have debtors, which is already calculated, 2,10,000. Cash in hand and cash at bank, cash in hand is 0. Cash at bank would be 2,20,000. Okay, so with this, hopefully the balance sheet should get tallied. So it is 11,58,250.
Yes, sir. Sir, if a loan comes 10%, 20% interest account பண்ணுங்க sir.
Yeah, yes. If he gives you details, very detailedly saying that interest is supposed to be calculated and all, then you should definitely take.
Sir, question balance sheet 10% loan கொடுத்திருந்தாங்கன்னா நம்ம சார் இன்ட்ரெஸ்ட் இம்ப்ளாய்ட் அட்ஜஸ்ட்மென்ட் தான் சார் அது.
Yes. If he has given you loan at 10%, it indicates that you are supposed to charge 10% interest expense. Okay.
சார் அந்த பேமெண்ட் வந்து கேஷ் பேங்க் பண்ணுமா நம்ம அசம்ப்ஷன் தான் சார்.
Generally it is generally interest payment, loan payments and all, if it is done, he will definitely give you. If he says
Okay,
if he says 10% interest and it has not been paid, it indicates that it is outstanding interest.
Okay, sir.
Yeah. Okay. So this is how you prepare your financials in case of single entry. Next, preparation and presentation of financial statements. This is this particular part you please take care on your own, because there is no real value addition. It's preparation of financial statements which you are very well averse about. Okay. From 16th question. Yeah.